Sheila Bair, bull by the horns, fighting to save Main Street from Wall Street and Wall Street from itself. In Bull by the Horns, Fighting to Save Main Street from Wall Street and Wall Street from Itself, Sheila Bair takes readers through her journey as head of the Federal Deposit Insurance Corporation, FDIC. A fierce advocate for tighter regulations and higher standards in the banking industry, Bair shares her first-hand experience grappling with powerful entities such as big banks and political regulators. The summary highlights her efforts to implement better financial policies, enforce lending standards, manage government insurance programs, and shift the focus from Wall Street to Main Street.
Sheila Bair's journey. Sheila Bair, a lifelong Republican, became the head of the Federal Deposit Insurance Corporation, FDIC, in 2006. Bair's thorough policy background, including administrative posts in the Senate and the Treasury Department, made her a strong candidate for this key Bush administration job. Bair found that deregulation had demoralized its employees and reduced its staff. With a focus on management, Bair's leadership transformed the FDIC. She fought for higher capital adequacy ratios than stipulated in the Basel II regulations and got FDIC-insured banks to contribute premiums for their coverage. Despite opposition, Bair prevailed, and in 2011, employees voted the FDIC the best place to work in the government. The collusion of regulators and banks. Bair's advocacy of tighter regulation placed her in opposition to Washington authorities with extensive ties to large financial institutions, connections that kept regulators in Wall Street's grasp. This collusion resulted in regulators proposing or opposing rules based on whether they helped or hurt supervised institutions. Bair and her team tried to save homeowners from the increasing default rate of sketchily securitized loans via loan modifications. However, competing incentives meant bankers had little to gain from helping borrowers stay in their homes. Bair cautioned that we risk another financial crisis unless the public counters the undue influence of the financial services lobby. Saving the banks, saving the system, but not the people. The book section reveals how Sheila Bair, the former chair of the FDIC, made difficult decisions during the financial crisis of 2008, which she aimed to avert from repeating. Bair enacted the FDIC's duty to ensure depositors' safety against bank failures and used unconventional methods, such as involving Susie Orman in their campaign, to reassure a panicked public. The narrative also reveals the tension between the government agencies' different agendas, where Bair saw FDIC's strong capital position and had the responsibility to protect depositors' interest when making decisions. Amid the struggle to save banks from failing, Bair lamented the lack of solutions aimed at helping struggling homeowners. Finally, the summary unveils the disarray within the government's bailout program and the big bank's subsequent executive bonuses, revealing why Bair would rather have not assisted the banks at all. The inside story of the financial crisis. In the systemic risk of U.S. banks, from identification to reform, Sheila Bair, former chair of the Federal Deposit Insurance Corp., FDIC, shares her experiences during the 2008 financial crisis, highlights the key decisions made by policymakers, and sheds light on the culture and practices of Wall Street. Despite voting for Republican presidential candidate Senator John McCain, Bair hoped that the incoming Obama administration would break the ties between policymakers and Wall Street. However, she was disappointed when President Obama named Timothy Geithner as Treasury Secretary, who staffed his team with investment bankers. Bair's efforts to stem the tide of home foreclosures were hindered by the overly complicated rules and procedures issued by Geithner's team. Despite positive meetings with President Obama, his financial team kept her at arm's length. The stress tests conducted by the Obama administration aimed to restore confidence in the soundness of the banking system, but the officials were willing to ease the rules to help banks like Citi meet the targets. Bair's dissenting voice led to rumors about her and her family profiting from preferential mortgages. She continued to press her case for protecting taxpayers and depositors through the Dodd-Frank Act's regulatory reforms and her work on the robo-signing scandal. Bair emphasizes the need to learn from the past mistakes of the financial sector and avoid driving the economy into the ditch again. Averting another financial crisis. In her book, Sheila Bair suggests simple measures to prevent or mitigate another financial crisis. Improving lending standards and capital requirements could have prevented the previous crisis. Bair recommends raising capital requirements, maintaining a ban on bailouts, breaking up mega-institutions, requiring securitizers to retain risk, and imposing a tax on large financial institutions. She also advocates for reducing national debt, ending government subsidies for housing, closing Fannie Mae and Freddie Mac, and making the tax rate on investment income equivalent to that on earned income. The regulatory process needs restructuring to favor the public, and there should be increased support for agency staffers. Overall, Bair argues that redirecting financial institutions toward supporting the credit needs of the real economy is vital for future economic stability.
Sheila Bair's book offers a clear comprehension of the tumultuous banking environment leading up to the 2008 crisis, and the urgent need for financial reform. It emphasizes the impact of deregulation, chummy ties between regulators and financial institutions, and a culture of greed and short-sightedness. Bair also suggests practical solutions to prevent another crisis, such as raising capital requirements, banning bailouts, breaking up mega-institutions, and levying taxes on large financial institutions. Ultimately, the book is a powerful call to action for Main Street to take an active role in demanding change and advocating for financial reform.